SP Angel, Morning View, Thursday 08/11/18 China seen moving to strike new trade deals outside the U.S. Click for PDF MIFID to exempt information. See disclaimer below. Galantis Gold, Lon, Gal, channel samples from Carney Vein Caras Resources * Lon, KRS, new high-grade gold. Results from Calidus Resources add further value to Caras. Calidus Resources, ASX, CAI, new Chinese trading drive could bring fresh metal support. China is increasing efforts to develop new longer-term global trading ties in response to rising tensions with the U.S., according to head of BHP Billiton. CEO Andrew Mackenzie adds, they are more active than they have been for a while in looking at the kind of trade arrangements that may allow them to trade with many countries of the world, to make up for the shortfall they may suffer from the United States. Mackenzie, a member of a global CEO Council of Western Executives, an influential global business advisory group, visits the nation about 3 times a year and said he had a private meeting with President Xi Jinping in June. He came out with a quote when I was talking to him about protectionism, which was all over the world's media, that in the West you have a thing, turn the other cheek. In China, we punch back. BHP made its first ever export in 1890s with a shipment of lead sent to Suzhou in eastern China. Melbourne-based BHP, the world's biggest miner, is focused on iron ore, copper, coal and petroleum and wins about 53% of revenue from China, the world's top commodities consumer, according to data compiled by Bloomberg. China's exports rose in dollar terms in October on a year earlier, as companies seek to make shipments before higher U.S. tariffs kick in. The U.S. is set to increase tariffs on $200 billion worth of imports from China to 25% in January, a move seen by bank envy as likely to have a more apparent effect on products including metals, textiles, chemicals, and plastic goods. There's no doubt that the Chinese will be seeking to offset the impact of some of the trade issues that they are facing, Mackenzie told reporters. Knowing the Chinese, they will be prepared to use all of the levers they have as a government to in the first instance, stimulate domestic demand. BHP is looking to capitalize on the new trade efforts, with a large procurement organization in the country and a Shanghai-based unit that develops internal company applications for mobile devices. We are relatively well connected, highlighting he's the only representative of the mining sector on the CEO advisory group. Vanadium prices continue to rise in Europe as buyers compete for available supply. Ferrovanadium prices are reported to have risen by a further 3.4% in Western Europe to $120-125 kgV by Fastmarkets Metal Bulletin. We wait to see if the ferrovanadium price might continue to rise in China. Fastmarkets MB report prices held steady in China over the past week due to lackluster activity, while European markets continuing to gain strength on increased activity, closing the gap to the Chinese market. Dow Jones Industrials 2.13% at 26,180, Nikkei 225 1.82% at 22,487, HK Hang Seng 0.26% at 26,216, Shanghai Composite minus 0.22% at 2,636, FTSE 350 Mining 0.42% at 17,630, AIM Basic Resources minus 0.10% at 2,174. Economics U.S. FOMC decision is due later today with expectations for no change in benchmark rates range of 2 to 2.25%. Markets are currently pricing in a 78% chance the Fed will hike during its last meeting before the end of the year in December. Fed officials will be satisfied if the November FOMC meeting is a relative non-event for financial markets, Bloomberg Economics said. Investors would be looking for changes in the economic outlook mentioned in the FOMC statement, while latest strong inflation and low unemployment numbers support a case for further tightening. China trade expands more than forecast in October as orders are being rushed in before the tariffs hit. Weaker Chinese renminbi also helps local exporters. USD-CNY was down 4.6% compared to last October. Trade surplus with the U.S. came in at $31.8 billion during the month, down from a record $34.1 billion in September. YTD trade surplus with the U.S. totaled $258.2 billion compared to a total of $275.8 billion for FY17. Exports, percent YOY, U.S. dollar terms, 15.6 v 14.4 in September and 11.7 forecast. Imports, percent YOY, U.S. dollar terms, 21.4 v 14.5 in September and 14.5 forecast. Germany, weak trade numbers released this morning come in following positive data reported earlier this week showing a pickup in German factory orders and industrial output in September. The central bank highlighted Q3 slowdown was due to temporary difficulties in the auto industry, which is forecast to be temporary. Although outlook remains fragile given an escalation of trade tensions and a general global growth slowdown. Car registrations dropped 7% YOY in October following a 30.5% YOY decline in September amid the introduction of the new emissions testing regime, known as WLTP. Exports, percent MOM, minus 0.8 v 0.1 in September and 0.4 forecast. Imports, percent MOM, minus 0.4 v minus 2.4 in September and 0.8 forecast. UK, Brexit-related uncertainty and a lack of new buyers weighs on UK housing market, which recorded a modest drop in values in October, according to the Royal Institution of Chartered Surveyors. The RICS index hit a six-year low last month, with the report coming on the heels of Halifax and nationwide data pointing to slower properties prices growth. Negative trend in the overall market is primarily led by the south and east regions of England. Respondents to the RICS survey were doubtful that UK sales momentum will pick up over the coming months. Kazakhstan, Kazatomprom, the world's largest producer of uranium, secured investors for its listing of 15% of the company in London this month, FT reports. Company, owned by the government, it is planning to raise up to $600 million during the listing, valuing it at $4 billion. Uranium prices have been recovering lately on the back of production cuts from major suppliers, hitting $29 per pound yesterday, marking the highest level since March 2016. Nevertheless, current prices remain far way off over $50 per pound levels seen before the Fukushima power plant disaster in 2011. Currencies: $1.1435 per euro versus $1.1470 euro yesterday. Yen $113.71, dollar versus $113.17, SAR $13.950, dollar versus $14.001, $1.314 per GBP versus $1.315 per GBP, 0.729, AUD versus 0.726, AUD 6.928, Chinese yuan per dollar versus 6.923 Commodity news: precious metals, gold $1,224 per ounce versus $1,232 per ounce yesterday. Gold ETF 68.5 Moz versus $68.70 Moz yesterday. Platinum $872 per ounce versus $876 per ounce yesterday. Palladium $1,124 per ounce versus $1,120 per ounce yesterday. Silver $14.51 per ounce versus $14.66 per ounce yesterday. Base metals: copper $6,129 per T versus $6,190 per T yesterday. Aluminium $1,984 per T versus $1,962 per T yesterday. Nickel $11,695 per T versus $11,755 per T yesterday. Zinc $2,471 per T versus $2,492 per T yesterday. Lead $1,929 per T versus $1,920 per T yesterday. Tin $19,105 per T versus $19,090 per T yesterday. Energy: oil $72.30 per barrel versus $71.80 per barrel yesterday. OPEC considers cutting back output following the U.S. midterms and continued slide of crude futures. OPEC are reportedly discussing a change in their stance to resume cutting output next year. OPEC ministers and its allies will meet in Abu Dhabi on Sunday and discuss scenarios including the possibility of cutting production again next year, according to delegates. With Iran sanctions now in place and oil still in ample availability, OPEC-led production cuts next year cannot be ruled out, two OPEC sources said on Wednesday. U.S. now producing more oil than Russia and Saudi Arabia. U.S. oil production jumped to a record 11.6 meters BPD last week, surpassing both Russian and Saudi Arabian output. West Texas Intermediate futures are now down 20% from the near four-year high reached on October 3. U.S. production is up a stunning 2 meters BPD from the same period last year, and 400,000 barrels from the week earlier, based on U.S. government data. The U.S. government expects October production was 11.4 meters BPD and that production can grow to 12.1 meters BPD on average next year. Natural gas $3.513 per MMBTU versus $3.518 per MMBTU yesterday. Uranium $29 per pound versus $28.80 per pound yesterday. Bulk iron ore 62% face spot CFR Tianjin $71.90 per T versus $71.80 per T. Iron ore remains supported from BHP's derailment, as the company continues shipments using port stockpiles in an attempt to offset delivery of fresh ore. CEO Andrew Mackenzie believes the company will have the ability to supply our customers as contracted to do so during the week-long recovery process. We lost control of a train. We monitored what was going on through our remote control center in Perth. We let it go through a number of points in the hope that it would slow down on its own, according to Mackenzie. As soon as it became a risk to bridges and trains in front, we derailed it. Staff realized if they didn't force the derailment of this train it could have caused an awful lot more damage and could have been a real safety risk, Mackenzie says. So they actually threw the points at a time when they knew it was moving quickly to derail the train and stop it before it damaged anybody. BHP has approximately 130 people working night and day to get things back to normal, aiming to move quickly to restore production and satisfy customers. The company is sharing any findings with competitors in the hope to improve safety, while making more significant boosts in spending in rail safety. Chinese steel rebar 25mm $690.50 per T versus $693.90 per T. Thermal coal, first year forward Safira $92.40 per T versus $90 per T. Coking coal futures Dalian exchange $199.20 per T versus $199.30 per T. Other, cobalt LME 3 meters $55,000 per T versus $55,000 per T. China NdPr rare earth oxide $45,610 per T versus $45,642 per T. China lithium carbonate 99% $10,103 per T versus $10,111 per T. Unique technology claims draws scrutiny for Albemarle. Major lithium brine producer, Albemarle, is drawing increased scrutiny from regulators and investors pushing for more details over claims to have developed a unique process that would more than triple lithium production from Chile's Atacama Desert without using more water. The lack of clarity over the issue prompted Chile's Nuclear Commission, CCHEN, which oversees the sale and export of lithium in Chile, to deny Albemarle's request to increase its production quota for the white metal. While the agency says the company has yet to explain how its technology will allow it to extract more lithium from the same amount of brine in the world's driest desert, its potential could help Albemarle cement its position as the world's largest lithium company, just as global demand is spiking for use in batteries that power electric vehicles and consumer goods. Albemarle says it is preparing a revised request addressing CCHEN's concerns, which are of a technical nature, and that it expects to ultimately receive approval to produce more lithium. The company are expected to spend hundreds of millions of dollars to build a plant in the Atacama that would further refine brine concentrate to increase the amount of lithium recovered to 80%, up from about half today. Some industry analysts say the current lithium recovery figure is lower, around 30%. Water usage is closely watched by Chilean regulators, despite the $100 million in royalties the country collects annually from Albemarle, due to concerns about water and brine levels in the Atacama. The company's lithium process, which relies heavily on evaporation ponds, was designed to extract potash fertilizer from salts, with lithium only as a byproduct. Tweaking that technology to boost lithium recovery has long been an obsession of Albemarle on SQM. Indeed, rivals in Argentina, including Livent Corp, have developed methods that allow for nearly all lithium in brine to be recovered, a step made possible in part by the different chemical composition of Argentine brine. The modification is made possible because Albemarle has developed a sustainable technology that allows us to increase the efficiency of our processes in the Salar de Atacama without using more brine or water, and as a consequence, produce more tons of lithium carbonate. Stephen Elgueta, Albemarle's Chilean manager, wrote to nuclear agency CCHEN on March 23. Outstanding questions about what exactly Albemarle have forced CCHEN to reject Albemarle's request to increase its quota, as the miner mainly failed to divulge how that technology would permit the increase in efficiency. Rapid lithium brine extraction advances for MGX Minerals. Following its partnership with Perlucid Treatment Solutions, MGX Minerals is advancing its third petrolithium and advanced wastewater treatment system to rapidly recover lithium from brine. Accelerating removal of lithium from brine is receiving broad interest from an industry struggling with evaporation pond residence periods of 12 to 18 months. In detail, MGC said the manufacturing of nanofiltration membrane housing is underway and primary nanoflotation, piping, and structural components are expected to commence fabrication in the second half of November. The company are targeting a system capable of processing 20 cubic meters per hour and to treat 1 through steam generator or OTSG boiler blowdown brine. MGX said that OTSG represents the largest water loss at steam-assisted gravity drainage facilities, known as SAGD. The system will treat water suitable for reuse, saving the majority of water loss and greatly reducing both the complexity and cost for new and expansion SAGD projects. While the viability of the process on lithium brines across western U.S. and South America is unproven, the company have initial plans to deploy the system in Alberta. According to MGX, the technology is capable of extracting lithium and other elements very quickly from petrolithium or oil and gas wastewater, natural brine and other brine sources such as lithium-rich mine and industrial plant wastewater. This reduces the physical footprint and investment in large, multi-phase, lake-sized, lined evaporation ponds. The miner says it also enhances the quality of extraction and recovery across a complex range of brines. Tungsten apt European $275-295 MTU versus $275-295 MTU battery. New Nendo launches hand-generated battery charging. Japanese-designed Studio Nendo has released a portable charger for mobile phones which uses hand-generated centrifugal force to produce electricity. The Denkel stick is extendable and bends into an L shape, which is then swung and rotated. A lithium battery is positioned on the end to maximize the centrifugal force, utilizing the weight of the battery as leverage. The device can also be plugged into mains electricity for everyday charging. Ford to launch global fleet of e-scooters. Ford has announced this morning that it is joining the race with Bird and Lime in the electric scooter rentals market, with a plan to deploy fleets in more than 100 cities by 2020. To accelerate its ambitions, Ford is buying Spin, one of several scooter rental startups to emerge in California over the past year. Ford did not disclose the price it paid for Spin, but Axios reported on Wednesday that it paid about $40 million. The head of Ford X said that his target of launching the scooters in more than 100 cities over the next 18 months would require a significant investment. Battery-powered homes. Residents of a new master-planned community will save about $2,000 a year in electricity bills thanks to groundbreaking technology. Smart battery systems are set to power 74 townhouses in Moulfa's Northwest Sydney project, Essentia, by capturing daytime solar energy which is efficiently stored and ready for use on demand. Natural Solar founder Chris Williams said the cost-effective units had been tried and tested and would be rolled out in 2020 as part of a $1.5 million installation deal with the developer. The modeling suggests savings for homeowners in this development could be between $2,000 and $2,200 per annum, and that's not allowing for the expected electricity increases over the next few years, he said. Set to hit the market next weekend with a starting price of $1.3 million, the townhouses will come with rainwater tanks, home automation, intercom, LED lighting and double-glazed glass. Company news: Galantis Gold, Lon, Gal, 5.8p, MKT cap £11.1 million. Channel samples from Carney Vein. Galantis Gold reports the results of 2 channel samples taken from underground development on the Carney Vein at its Omagh gold mine in Northern Ireland. One sample, extending over a true width of 1.8 meters, averaged 7.1 grams T gold and 10.6 grams T silver, while the second sample, over a true width of 3.2 meters, averaged 10.4 grams T gold and 22.4 grams T silver. The company points out that the first channel sample did not include some mineralized material which was obstructed by the hanging wall margin. The results follow an announcement, in late August, of another channel sample on the same vein which averaged 12.8 grams T gold and 33.1 grams T silver over a width, though not necessarily a true width, of 1.7 meters, taken as close to 90 degrees across the vein as was practical, given some interference by ground support. Caris Resources * Lon, KRS 0.35p, MKT cap £8 million. New high-grade gold results from Calidus Resources add further value to Caris. Calidus Resources, ASX, KI, 3 cents, MKT cap $46.8 million. Caris currently hold 458 meters shares in Calidus Resources with an additional 265 meters new shares due to be granted by Calidus when the gold project PFS is published. All Caris shares in Calidus are in escrow for 2 years with the lockup expiring on the 23rd of June 2019. Buy, target price 1.04p. Click for full note PDF. Caris Resources has reported on an announcement by its 35% owned Calidus Resources of high-grade gold results from the current infill and extension drilling program aimed at firming up and extending the current 712,000 ounces indicated and inferred mineral resource at Warrawoona in the Pilbara region of Western Australia. The current resource estimate for Warrawoona, released in December 2017, comprises 8.4 meters tons grading 2.01 grams T gold, 541,000 ounces, classed as indicated, and an additional 2.1 MT classed as inferred grading 2.5 grams T, 171,000 Oz. The drilling formed part of a program intended to support the start of a pre-feasibility study during 2019. Among the drill results, which highlighted in today's announcement, are an intersection of 6 meters averaging 7.61 grams TO from a depth of 16 meters depth in hole 18 GRCO31 at the St. George prospect, an intersection of 8 meters averaging 5.64 grams TO from a depth of 44 meters depth in hole 18 GRCO32, including single 1 meter intersections assaying 11.03, 13.05 and 10.95 grams T gold at the St. George prospect, an intersection of 14 meters averaging 1.77 grams TO from a depth of 35 meters depth in hole 18 GRCO47 at the St. George prospect, an intersection of 2 meters averaging 10.23 grams TO from a depth of 91 meters depth in hole 18 GRCO50 at the St. George prospect, an intersection of 2 meters averaging 20.84 grams TO from a depth of 88 meters depth in hole 18 KLRC152, including a single meter averaging 40.51 grams grams. T gold at the Klondike East Prospect, an intersection of 6 meters averaging 3.82 grams. TO from a depth of 93 meters, depth in hole 1-8 KLRC 148 at the Klondike East Prospect, an intersection of 15 meters averaging 0.97 grams. TO from a depth of 97 meters, depth in hole 1-8 KLRC 172 also at the Klondike East Prospect, an intersection of 2 meters averaging 7.29 grams. TO from a depth of 66 meters, depth in hole 1-8 KLRC 152, including a single meter averaging 12.75 grams. T gold at the Klondike East Prospect, and a single meter averaging 10.79 grams. T gold from a depth of 2 meters in hole KLRC 158 at Klondike East. Commenting on the results from Warrawoona, the managing director of Calidus Resources, Dave Reeves, pointed out that the St. George Shear is only 150 meters north of Klondike, and that with only 60% of this area to report and the tenor of the grade increasing to the west, I look forward to reporting these further results and the results of an initial diamond drill program that is targeting resources beneath the potential open pit at Klondike. Calidus Resources also has a program of hydrological and geological drilling underway to establish data for the PFS, and reports that it is planning to start further geochemical sampling next week, infilling and extending a number of regional gold-in-soil anomalies across the approximately 550 square kilometers Warrawoona tenure. Russell Lamming, CEO of Calidus Resources, underlined that these high-grade results from the St. George Shear and Klondike East underpin the prospectivity of the wider Warrawoona Gold Project and the strong potential for the current resource of 712,000 ounces to be materially increased in the near term. Conclusion: exploration at Warrawoona is continuing to intersect high-grade gold mineralization and looks in a good position to increase the existing 712,000 ounces resource estimate as it works towards a pre-feasibility study in 2019. SP Angel act as nomad and broker to Calidus Resources. Disclaimer: this note has been issued by SP Angel Corporate Finance LLP, SP Angel, in order to promote its investment services. This information is a marketing communication for the purpose of the European Markets in Financial Instruments Directive (MiFID) and FCA's rules. It has not been prepared in accordance with the legal requirements designed to promote the independence or objectivity of investment research. This document is not based upon detailed analysis by SP Angel of any market, issuer or security named herein, and does not constitute a formal research recommendation, either expressly or otherwise. The value of investments contained herein may go up or down. Where investment is made in currencies other than the base currency of the investment, movements in exchange rates will have an effect on the value, either favorable or unfavorable. Securities issued in emerging markets are typically subject to greater volatility and risk of loss. This note is confidential and is being supplied to you solely for your information and may not be reproduced, redistributed or passed on, directly or indirectly, to any other person or published in whole or in part, for any purpose. Neither the information nor the opinions expressed herein constitutes, or is to be construed as, an offer or invitation or other solicitation or recommendation to buy or sell investments. This information is for the sole use of eligible counterparties and professional customers only and is not intended for retail clients, as defined by the rules of the Financial Conduct Authority (FCA), and subject to SP Angel's terms of business as published or communicated to clients from time to time. It is not investment advice and does not take into account the investment objectives and policies, financial position or portfolio composition of any recipient. This document should not to be relied upon as authoritative or taken in substitution for the exercise of your own commercial judgment. SP Angel is not responsible for any errors, omissions or for the results obtained from the use of the information in this document. This document has been prepared on the basis of economic data, trading patterns, actual market news and events, and is only valid on the date of publication. SP Angel does not make any guarantee, representation or warranty, either expressly or implied, as to the factual accuracy, completeness, or sufficiency of information contained herein. This document has been prepared by the author based upon information sources believed to be reliable and prepared in good faith. SP Angel, its partners, officers and/or employees may own or have positions in any investments mentioned herein or related thereto and may, from time to time, add to, or dispose of, any such investments. SP Angel Corporate Finance LLP is a company registered in England and Wales with company number OC3170449 and whose registered office address is Prince Frederick House, 35 to 39 Maddox Street, London W1S2PP. SP Angel Corporate Finance LLP is authorized and regulated by the Financial Conduct Authority, whose address is 25, The North Colonnade, Canary Wharf, London E145HS, and is a member of the London Stock Exchange plc. www.spangle.co.uk. SP Angel combines the focus, flexibility and creativity of a boutique with the expertise of a global investment bank and current percent UK 100 gold, oil, WTI, DJIA.